Good morning everyone and welcome to my morning report analysis videos with me, Richard, market analyst at Hantec Markets on Thursday 31st of January. We've had this Fed meeting overnight and it has had a fairly sizable impact on market sentiment. We've had the dovish tilt from the Fed. I mean, it certainly was a dovish move, the fact that they've gone patient on further rate hikes, removed the line in the statement about further gradual hikes expected, and also they've moved the balance sheet reduction program to a more manual process. So subsequently we've seen quite a sharp move against the dollar, and also treasury yields falling away. Treasury yields on the 10-year and the 2-year charts certainly fell quite sharply, and they continue to fall. So, and that is again putting pressure on the dollar. We had that sharp move to the downside on the dollar yesterday. 95 figure pretty much on dollar index is a level to watch. That would be multi-month lows if it went below that. And you can see, generally speaking, across the board, euro dollar up around 15 big figure. That is a key level to watch out for. I'll show you the importance of that in the chart analysis. But we've also seen sterling holding ground, dollar yen back below 109. Again, another key move there on a near-term basis. Gold holding up above 1310. Another key move there. So we've seen some big moves in recent days and some really outlook changing moves potentially as well. We've seen equities really performing strongly on the back of that dovish Fed move as well. So the S&P 500 back at the highest level since early December, looking to break out, looking to continue this recovery, and certainly you can see that with volatility falling back. That's generally seen to be obviously a positive for equity market sentiment. European equities have been stronger. I have to say they were stronger early morning and they've slipped back a shade, but we've still got positive futures on the US markets. Also looking at the oil price, which is sort of on the brink of a breakout, confirmed breakout to multi-month highs, as well as that recovery continues. So these markets are all responding to the Fed this morning. So in terms of data points today, we've got sorry, that's this afternoon. Let me go back. We've got a little bit of US data to be interested in, but first of all, we're looking out for the Eurozone GDP numbers at 10 o'clock. That's expected to show a decline on the year-on-year basis back to 1.2%. So GDP in the Eurozone expected to come in a bit certainly much lower than it was in Q3. So flash reading of Q4, 1.2%. Then we're looking at on the Reuters data, we've got core PCE penciled in, so let's have a talk about that. That may not happen though, given the fact that we've obviously got the government shutdown still affecting data releases in the States, so this is not gospel. But 1.9% on the core PCE will be interesting if that misses to the downside, or that could put further pressure on US numbers. We're also looking out for jobless claims at 130, 215,000. That 199 was lowest level on jobless claims last week since 1969. Wow, that just shows how tight the labour market is in the States. Employment cost as well at 130, 0.8%. That feeds into, or is a reflection of wage growth. New home sales 569,000 is the expectation there, so an improvement up from last month. So lots of US data to take us into the afternoon, but for now certainly the dollar is under pressure. Now looking at my chart of the day, Euro Swissy. Now this has been an interesting chart, I think, in recent weeks, as Euro Swissy has sort of, well, it's been in this trading range, in this range play since August, really, between sort of 112 to 115, 113.50, bang in the middle of the range, pretty much. And you've broken up above the middle of the range. That pivot line had been resistance, is now supportive on the breakout. So you've got the improvement in the momentum indicators. MACD lines accelerating, RSI above 60, in the mid 60s, stochastic strong. Certainly looks as though we're in a more positive outlook now, trading above all the moving averages, which are beginning to turn higher. You're in the middle, or the upper reaches of this band now, so up towards 15 big figure, 115 big figure. So that would be the level to watch on this move. Little corrections are a chance to buy. You can see that on the hourly chart, strong configuration on momentum, and weakness is a buying opportunity. 113.50 is obviously the ideal entry point, but you can sort of zoom in here and get a sense that initial support comes in around 13.80. Little bit of a pivot in the last few days, so any sort of unwind back towards that sort of level I think is a buying opportunity, and yeah, I think it looks like it's going to be pushing on. You've got resistance that came in, interesting, that little November high 114.35 has come in today as resistance, and a breakout above that would open the next November high, which is 114.70, but 115 figure is obviously where we're sort of on the track towards, I believe, as little weakness is bought into. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.